What's up, my people? Welcome back to Option Science channel. I know it's been quite a long time since I posted any video. I was in a bit of travel and everything. I had gone to my hometown and then kept on traveling between the few cities, so I couldn't really make any video as such, a comprehensive video. I think when I made a biggest loss in my trading journey so far, I had updated a PNL with one short video, and I thought that it is very important I update whenever I make losses, because we all make losses, right? And it is not a one-sided journey. Trading is never all about profits every day. So I wanted to be as real and raw in front of my followers as possible. So I keep on posting about my profit videos. So it is imperative that I keep posting about my loss videos also whenever I make it. So that was the reasoning behind quickly making a short video and posting it in my YouTube channel. Uh, so today's video will recap all those expiries. I think two expiries I traded in between, which was not very easy. We'll just recap those two expiries, and of course today also, wherein today is a Tuesday, and Tuesday happened to be Nifty expiry, and we have made close to around 0.9 percentage, approximately around 1% of the capital deployed for today. And let's do the trending thing which is there nowadays, verify by sensible. So we'll get that also done. uh, so this is actually a good thing which sensible has done, wherein our ecosystem, trading ecosystem, is full of scamsters, and people can be easily tricked showing a fake screenshot of profits and fake videos and whatnot. So in this kind of situation, whatever sensible has introduced is a step forward towards the right direction. And as you can see, this is sensible to verified profit for me, 21,000, around 21,000, which is approximately close to around 1% of the capital deployed. So let's get back to the charts today. So I've been trading Nifty for the last three expiries. Ever since the 50 strike prices has been introduced, it has been very good in terms of liquidity. If I'm not wrong, we are able to execute ATM strike plus or minus 100 in the range for market orders. As far as I think, only far OTM calls and puts are not having market orders. Otherwise, it's pretty decent in terms of liquidity. So today it was kind of a mixed trade, wherein the initial half of the entire trading day I was sitting on MTM losses, and I couldn't recover my MTM losses. I think till 12:30 in the afternoon I was in losses. So our day started around 19,300, and from here market started making an up move. It was a constant up move, but it was not very aggressive. As you can see, there was a mix of red candles and green candles. So slowly and steadily market kept on going up. So I started with 19,300 puts. I started with 19,300 puts, and then as market went up, I shifted my 19,300 puts to 19,350 puts. So I shifted my 19,300 puts to 19,350 puts. As far as calls are concerned, I was initially at 19,400 calls, and since market started going up, I had to book my losses in 19,400 calls, and I moved towards 19,450 calls. So I had shifted my 19,400 calls to 19,450 and 19,300 puts to 19,350 puts. So in this period of consolidation, where market was about to break the 19,420 levels, but it was not able to. I think two or three times it tested the 19,200 and 19,420 levels, but it was not able to break it. And this level is important, as we can see from the historical charts. This is the area from where, if you see, on 2nd December, this is the area from where maximum sell-off had happened, and the market had fallen from this point. So it was imperative that heavy sellers are sitting on that particular area. So I waited for this level to be broken. Had this level been broken, I would have moved my calls from 19,450 to 19,500. but that was never the case. And then thereafter market started coming down, so I was holding on to 19350 puts, and at one particular point, I think around this candle, my puts were actually threatened, but by that time the puts had actually decayed a lot of value because it was close to 230. So by that time puts had decayed most of its value, and I kept on holding to that position. Had the market moved aggressively from this range, I would have shifted back my 19350 puts to 19300, but there was no need of there was no need of doing it. And I sat comfortably on 19450 calls and 19350 puts, and market expired in between, giving us a profit of around 21,000. So that was the Nifty trade today. Why it was difficult? Because initially in the uptrend, I had to book around 0.5 percentage loss in 19400 calls. I'll just show you where I booked losses. Yeah, so 19400 calls around minus 11,000, which is 0.5 percentage of my deployed capital. I had to book in the initial up rally. So till afternoon, I was not able to come to MTM profit range. So till I think till 12:30, it was minus 2k, minus 3k, that range. I had actually gone to minus 7k, and from there slowly started recovering. And ever since afternoon, I was uh, able to make my MTM in positive range, and ended with almost around 1% profits. So I would say it was a mixed day. It was not very easy to trade Fin Nifty because of the initial up move, but then later on it consolidated and started moving down very slowly. So it was kind of okayish after the first half. So that is about today, and let's go back and see the days where I made my maximum loss of around 1%. So that was, I think, on December 1st expiry. So let's go back to December 1st. Yeah. So this was the expiry where I had made a loss of around 1% of my capital. So let's understand what happened. So market opened up around here, 43,500, gap up actually, and from there on it kept on coming steadily downwards. So at a point where it had a down move, and I think from that time till around 115, the market consolidated in this range. Okay, it was paradise for option seller. Myself being an option seller, it was paradise for me also. I clearly remember from the beginning of the December 1st expiry, I was never in MTM losses. Okay, right from the beginning my MTM was in positive range, and it kept on improving as we progressed. So at around 115, I remember my MTM was close to around 27,000, which was well over 1% for my deployed capital, and I was looking forward to a pretty good expiry. But suddenly things started changing. The market was taking good support around 43,300 levels, and we got an alert candle, which was this one, wherein market was trying to break the 43,300 level, but I still held on to 43,300 level. I think I was on 43,300 puts and 43,500 calls. So I was holding on to 43,300 levels because it was such an important support for the market, and I was waiting for that to be broken to get my puts far away from the strike price. So what happened was that market broke the support with a huge red candle. So if you compare the sizes of other candles ranging from around 9 a.m. Ranging from around 9:30 to 1 p.m., if you compare the size of that candle and this particular red candle which broke the support of 43,300, you can imagine the kind of frenzy which happened in the market. The frenzy was so mad, it was so mad that the puts spiked like anything. So to give an example, I think my puts were trading at around 11 rupees. This candle was formed in a flash of seconds, and when I saw the screen, right from 12, the price had jumped to around 27 or 28. And I had to exit my puts at a very bad position of around 30, 31 rupees. Further to which it went up to It went up to 51. You can see the down move was so vigorous that the puts which I exited at 31 spiked up to around 51 and then suddenly recovered back and closed in zero. So what happened was that I was having an MTM of around more than 1% at that time of this red candle. Due to the bad position at which I exited my puts, I lost half of my profits and I was still looking at around 0.5% at that time. But the mistake which I did was that once this level was broken, actually, when this candle was broken and I had to exit my puts at very bad prices at around 31, which I had sold for around 12 rupees. I had lost half of my profits there, and still I was looking at around point 4 or 0.5% of the capital, and it was a comfortable profits given how the day had gone. But the mistake I did was that as soon as this big candle was formed, as soon as that candle was formed, I rolled down my puts from 43,300 levels to 43,000 levels, as well as 43,100 levels. So that is the blunder which I did. From 43,300, I moved half of my puts to 43,100 and the other half to 43,000. So after this red candle, market kept on coming down. It was such a vigorous selling. So I think I sold 43,000 at around 6 rupees or something, which spiked to more than 15 or 16, and 43,100, which I sold for around 9 rupees or so. It had spiked to around 18 to 20 rupees. So after this red candle ate away 0.5% of my profits, the other two put adjustments which I did, that also was taken away. At this point, the whole market was, I think, on a panic, and so was I. So in the panic, I booked the losses in these two puts as well, and I took off all the puts, assuming that the market is going to go for a heavy fall. But that was not the case, because immediately after I took off my puts, the market reversed and reversed in such a great momentum. So I had taken losses in put side. Let's discuss what happened in the call side. So I told you at the time of this particular big candle, I was sitting at around 43,000. I was sitting at around 43,500 calls. But soon after the market fell, when I moved my puts to 43,100 and 43,000 level, I also moved my calls to 43,400 level. And just after I took off my puts 43,100 and 43,000, just after I squared off booking the losses, market made a complete U-turn, that too in a great momentum, which threatened my 43,400 call as well, and I had to exit that leg also at a huge loss. So to say, when market broke down, I rolled down my puts, which got hit, and I rolled down my calls, which again got hit in this upward U-turn. So both sides, my stop losses were hit, and my MTM touched around 1% loss. That is the biggest loss which I had seen ever in my MTM. And I keep a rule, guys. I'll never risk more than 1% of my capital any given day. So had I traded further to that, maybe I could have recovered some portion of it and could have entered in maybe 0.5% or 0.3% of losses. But my risk to reward didn't favor that, because any trade which I'm going to enter after 1% of loss has a sufficient risk of has a sufficient risk on the other side as well, right? I can even go to increase my losses from 1 to 1.5% or even furthermore. So my rule was clear. I didn't have any appetite left for any risk to be taken after MTM touched the 1% losses. So I exited all my trades and booked a loss of around 1% in that particular expiry. So the learning from here was that when these kind of frenzy happens in the market, when there's a sudden crash or a sudden rally, uh, the difference is when there is a rally, it comes in a smaller pace, right? It doesn't come very drastically, but when there is a fall, it can fall very drastically. So in these kind of situation, when there is a drastic fall, it is better to wait for the market to settle rather than to roll down your puts or calls. It is better to wait for the market to stabilize and maybe you can keep the if the puts are spiking, maybe you can just keep the call side open, never to roll down the calls or roll down the puts, just keep the call side open and leave it as be. Had I done that, I would have um, exited with a profit of around 1% that particular day. But to my bad luck, I did this adjustments which backfired on both fronts. So I had to book the losses and get out. Coming to the next expiry, which was on December 8th. Yeah. So this is the expiry. So this is the next expiry wherein I had booked a profit of around 0.5 percentage, uh, which is lower than my expectation. I always try to make more than 1% during any expiry day. That is where you have the maximum probability of milking the profits. So this day what happened, market was only in an uptrend, right? All the other days market behavior was such that it will make a move and then it will consolidate for some time, then it will come back, or in the opposite case, it'll make a down move, it'll consolidate for some time, then it'll retrace back a bit, it'll recover a bit. So this was the market behavior for past many weeks. So I was hoping on to the same, but this time for the expiry, market only kept on moving in one direction, which was the up direction. And one interesting thing which I observed in the first half of the trade was that it was an election day, also Gujarat election, so probably due to the uncertainty in the market as well. During the initial up move, only calls were spiking and puts were not at all decaying, right? So initial up move, which had around 200 points, only calls were spiking. So whatever calls I had sold, it was spiking like anything, and whatever puts I had sold, it was not at all decaying. So looking at the MTM, I was mounting on losses. So at one point, I reached around 0.5 percentage of my losses, and then I thought, okay, fine. Since the market is in such an uptrend, let us cut the calls and keep only the puts. I think I was on 43,000. Uh, I started with 43,000. I started with 43,000 puts, and since the market started going up, I rolled it to 43,100 puts. So at this particular area, I thought, okay, since the calls are already spiking and put is not decaying, I'll just take the call off. I'll square off all my call positions and I'll keep only my put positions. So what happened after was that when I started taking out my call position and kept only my put position, this minor reversals were happening in the market, and this was actually spiking back the puts also. So at one side, I don't have the call position to balance my puts because calls were spiking and puts were not decaying. So I took out the calls and kept only the puts, and then the minor retracement happens and the puts started spiking. So from minus 10,000 losses, I had actually gone to around minus 17,000, close to around minus 1% of my deployed capital. So from that particular point, had it gone to 1% losses, I would have exited from this expiry as well. But from there on, the premium started balancing each other, and there was good decay in the put side whenever there was a up move. And I remember at around 2:30, 43,500 had around 25 lakhs contracts open interest, but that was comfortably taken out. And this also had caused a spike in calls at that level. And I was also sitting on 43,600 calls at around 2:30, and I was also affected from around 0.75 percentage of MTM. Due to that particular spike, I came back to around zero point 0.3, zero point 0.4, and later on, since market consolidated here, I recovered a bit of it and ended up in around 0.5 percentage profits for that particular day. And that particular day was, to be honest, the toughest expiry I've traded so far, because market kept on moving only in one direction. There was no consolidation or decay from the other end. If there is decay from the other end whenever market is moving in one direction also, we can manage pretty well. But due to election scenario and much of the uncertainty in the market, the premiums were behaving very odd. And any given day, these kind of days, I will take any kind of profits just to exist in the market, just to exit with some profits itself will be a good thing in these kind of days, because these kind of things never really repeat very often in the market. So you have to hold your ground in these kind of difficult days, and I was particularly happy that I could come out with 0.5 percentage profits. So that was the recap for last two expiries, and of course today position we have already discussed. So this is my trading style. And one more thing which I wanted to tell you is that since the VIX is very low, I have not been trading with straddles much, because in straddles it is beneficial to have a lot of premium. We are not getting much of the premiums in at the money straddles. So during expiry days I don't start my day with straddles, or else usually I used to start my day with straddles, but nowadays I am moving on to far OTM calls and far OTM puts, and I'm starting my day and I'm starting my expiry days with non-directional strangles. And as like I explained to you, as the direction of market keeps changing, we keep adjusting the position. That is how I come out with profits. It's purely non-directional. With, of course, you should have some price action conviction about some directional sense. So that is how you can take advantage of the strategy as well. So that is my trading style, and it has worked well for me so far, at least in the expiries. So that is the update for many days where I couldn't post any trading videos. I'll keep on posting my trades regularly from here on. So, so that's it for today. I'll see you all in my next video. I hope you all had a great trading session today, and I wish you all the best. Bye bye.